What if you had the exact playbook from a top fund manager, breaking down step by step how to build serious, long-term wealth in the stock market? Well, that's exactly what we're going to unpack today. We're distilling Gautam Baid's masterclass into a practical guide. And just a heads up, this isn't about day trading or quick flips. It's about building a financial fortress for the long haul.
You know, this quote just nails the first, and honestly, the most important step, a massive mindset shift. We're not talking about making enough money to change your car. We're talking about a strategy that can literally change your life, change your house. And this entire playbook is built on that powerful foundation.
So here's the game plan. We're going to build this strategy together, piece by piece. We'll start with the foundation, getting our mindset right. Then we'll create our map to spot those huge market trends. From there, it's on to the hunt for specific ideas. Then we'll use a filter to avoid the big disasters, create a blueprint for our portfolio, and finally, we'll unleash the superpower that makes this whole thing tick.
All right, section 1, the foundation. Look, before we even touch any charts or numbers, you have to get your head in the right place. Because without the right mindset, none of these tactics or strategies are going to stick in the long run. It's that simple.
The core idea here is really simple. We're not chasing quick profits. We are planting money trees. The whole goal is to build wealth that actually lasts, wealth that's powered by the absolute magic of compounding. But to get there, you need this unwavering belief in the long-term story. You know, whether that's the story of one incredible company or the growth story of an entire country.
Okay, so once that mindset is locked in, now we can pull out our map. The heart of this strategy is a top-down approach. So, before we go hunting for individual companies, we first need to identify the massive waves, the mega trends that are going to lift entire industries for years, even decades to come.
So, what do these mega trends actually look like in the real world? Well, Bard's got his eye on 3 huge ones right now. First, everything that supports the AI revolution. I mean, as giants like Google and Microsoft pour billions into AI, they create this incredible demand for the picks and shovels, power, data centers, all that infrastructure. Second, the massive health shift being driven by these new weight loss drugs. And third, a global surge in defense spending as the world, well, rearms.
And just to help you grasp the scale we're talking about, let's just zoom in on one of those trends. The market for weight loss drugs alone is projected to hit $100 billion by 2030. Think about that. When you find a wave that powerful, you don't need to find a needle in a haystack. The entire haystack is moving in your favor.
Okay, so you've got the mindset, and you've identified the megatrends. Now for the fun part, the hunt. This is the engine of the playbook, the practical, repeatable process you can use to actually find specific companies to invest in.
This is where discipline beats luck every single time. Bae calls this his daily intellectual treasure hunt, and I love that. It's a system. You're scanning official filings, you're reading these niche industry sites that nobody else does, and you're listening to every single word management says on their calls. You're not waiting for a hot tip. You're out there hunting for your own clues.
Now, one of the most powerful patterns to look for is something called post-earnings announcement drift, or PEAD for short. This is basically when a company reports a huge acceleration in sales and profits, but the market is slow to catch on. Even if the stock pops 10% the next day, the market often hasn't fully grasped the change, and that creates a window for smart investors to get in.
Let's make this real with an example. So Force Motors was a neglected stock, completely off everyone's radar. Then they launched a blockbuster product, the Urbania. And all of a sudden, monthly sales growth just exploded. But the market was slow to re-rate the company. For anyone who's spotted that pattern, that period of neglect, followed by breakout numbers, it was the perfect setup. And the result? The stock became a 10-bagger in just 3 years.
Okay, so you found a promising idea. Now, the next step is just as important, if not more so, filtering out the potential disasters. This is what Badai calls the negative art of investing. You know, sometimes knowing what not to do is way more important than knowing what to do.
This is where you have to put on your forensic accountant hat. Using a checklist of red flags, you gotta ask the tough questions. For instance, are they changing auditors often? Because that could mean they're shopping for someone who'll approve some questionable accounting. Is the owner pledging their own shares as collateral? That can create massive selling pressure if the stock drops. Each one of these questions is designed to help you spot the landmines before you step on them.
All right, so once you have a list of high-quality ideas that have made it through the filter, it's time to actually build the portfolio. And this isn't about just randomly throwing stocks together. It's about having a clear, intentional structure that's designed for both long-term growth and resilience. And the blueprint is a really simple 80-20 split. The vast majority of your capital, that's 80%, goes into what we've already been talking about, high-quality companies riding those long-term structural megatrends. The other 20%, well, that's reserved for something a little different, for what are called variant perception plays.
Think of it like this. That 80% is your powerful, steady cruise ship, just sailing along with predictable, long-term compounders. But the 20%? That's your speedboat. This is where you make those contrarian bets, finding value where the market only sees a temporary problem. This is how you generate real alpha, which, by the way, is just a fancy term for returns that actually beat the overall market.
Let's move on to our final section, and I'd argue it's the most powerful concept in this entire playbook. It's the superpower that makes long-term investing really work, and it's all based on some beautifully counterintuitive math. So, let me just ask you this. What if you were wrong on half of your investments? I mean, in most fields, that's a failing grade, right? But in the stock market, that can actually be the formula for incredible success. So, how is that even possible? Let's make this really concrete. Imagine you invest in just 2 stocks. One is a huge winner, returning 26% a year. The other is a total loser, and it falls 26% a year. Now, after year 1, your portfolio is basically flat. But what happens if you hold them for 10 years? Well, the loser goes to pretty much zero. But the winner? The winner does something absolutely incredible. And here's the magic. After a decade, even though you were dead wrong on half your portfolio, your total return averages 17.6% per year. How? It's because your losses are capped. A stock can only go to zero. But your gains? They're unlimited. They compound and grow exponentially. That imbalance is what we call positive asymmetry, and it means one huge winner can easily wipe out the losses from many, many failures.
So what does this all mean for you in practice? It means the single most important rule is to let your winners run. Don't cut your flowers to water the weeds. Once you've identified a true compounder, your main job is just to hold on and let the asymmetry of winning do its work over years and maybe even decades.
So, we've covered the mindset, the map, the hunt, the filter, the blueprint, and the superpower. You now have the complete playbook. And the final question is for you. Using these frameworks, what's a pattern out there right now, a period of neglect, that you think the rest of the market is completely missing? Because that is where the real opportunities lie.